Hi, this is Connie from Prosperity Finance. How are you? If you just returned from holiday, I hope you had a fantastic holiday. I went to South Island for skiing with my daughter. It was my first time and I really love it. But unfortunately, I got sick after I returned to office, so I still sound losing my voice. So that's why there was 2 weeks gap between last video. So apologies for that. But I'm back to this. So going forward, we will have a weekly content just for you. Right, today I like to chat about interest rates. If you already have a loan, you're probably shocked that all the mainstream banks has increased the interest rate last week. Start with the ASB. The increase magnitude is really big. So it's over 30 basis point increase. It's very rare and very sudden. And after ASB increased interest rate, all other banks follows. When this news came about, I was actually in South Island. I couldn't believe my eyes. After I returned to work, I read the news and understand the reason for the rate increase. So the purpose of this video is to firstly we'll explain why it happened, because if we know the cause, then we know how to deal with it, right? So we'll discuss about the reason for the rise, and then I'll give you some tactics what to do now so that you can minimize the impact. Okay, so first of all, so why it happened? Well, I would say because New Zealand economy recovered really well compared to the rest of the world. As a result of that, the inflation data came out in the same week as the interest rate rise, was really shocking. Now, just in case you're not aware, Reserve Bank has a role of controlling the inflation around close to 2%. So the inflation data came out a week ago was like over 3%. So that's the highest over the last 10 years. So very significant. Now, is inflation harmful? Oh yeah. So with inflation, what happened was people stopped saving because everything's getting more expensive. So basically people kind of stop saving and they spending because they want to purchase at a cheaper rate before it's getting too expensive. Also, people buy investments, assets like gold and properties because they preserve the value. And also, it's kind of make exporter and importer very hard for planning the exchange rates because the exchange rates will get affected by inflation rates. And for business owners, they will shift their focus from being productive to think about repricing everything because the costs actually change very dramatically, and also their output level can be quite different, their price can be different, so it doesn't really help the economy being productive. So there's a lot of harms. Of course, deflation also harmful because people basically reduce spending because they expect the goods getting cheaper and cheaper, so they wait, right? So either or is not good. So Reserve Bank want to control around 2%. That's the comfortable level. So COVID is one of the main reasons causing the inflation. From one hand, it's New Zealand economy recovered really well, but on the other hand, because of limited resources like material, labor, everything, so it pushed the price going up. So also Reserve Bank stopped printing money because they don't need to support the economy anymore. So the bank actually, cost of funding getting more expensive. So as a result, all the main banks, they have started raising the interest rate at a big percentage, over 30 basis points. So even the week before the interest rate increase, if you read the news from the media, you will see that they're talking about the earliest the interest rate would hike. It's about end of this year or even early next year or mid next year. And then suddenly in a week, it's become reality. So it's very shocking. It's shocking to me as well. So anyway, it's become a reality. We can't really change it. And I personally don't expect the interest rate will go back to the level a week before. So this is a new norm. And if you read the news, some economists predict in 2 years' time, the official cash rates, which also drive the shorter term interest rates, is going to increase by 1.5%. So you probably expect 4% interest rates. To a lot of people who only just had a home loan over the last a year or two, you probably would think this is so unaffordable. Whereas, long-term borrower, like if you have experienced the GFC time, the interest rate was actually at 9%. So it's still very record low interest rate. So it's, depends what your experience, but definitely the cost of borrowing has gone up. So if we can change it and the rates doesn't look like going to go back to a lower level, what can you do about it? So now it's a good time to review your interest rate. Now, your home loan may not come off fixed term, but that's okay. I tell you what, at the moment, the break cost, if you inquire break cost from your bank, it's very low. And most cases is even zero. Because when you break your loan, the bank will lend you at a higher rate. So effectively, there's no cost for the bank. So they're happy to break for you. So if the break cost is nothing, why would you review your interest rate strategy again? Well, the interest rate is not very high. It's not 4%. So if you're conscious about interest rates and you expect the interest rate would go up to 4%, and that would probably cause some pressure, stress for your life, then probably consider lock some of the loans, for slightly longer term, like 18 months or 2 years, rather than have everything with 1 year or have all the eggs in one basket. Now, of course, we'll consider 1 year because it's still the cheapest. You probably get 2.45 or 2.50. That's kind of the 1 year rates sitting at the moment. Although the 2 year rates is quite high, 2.8, 2.9, but average out over 2 years, you're probably better off. Well, if you should go with the 2 years straight away or 1 year and then roll over for another year, it really depends how you perceive the interest rate trend. While this is $1 million question, who knows? Even economists predict wrong all the time. You have to make your best guess, unfortunately. So I would think about my own situation. Are you conscious about the cash flow? Would that give you a lot of headaches if rates do go up to 4%? Because we don't know, but it's likely. So if you expect your income going to be reduced, or at the same time, your loan come off from interest only to principal and interest, your rate payment probably double than before. And also, if you have an investment property, you know that from 1st October, you cannot claim interest if you purchase that property after 27th March or at reduced portion if you purchase before the 27th March. So basically, you have to pay more tax. So if you have less income coming in and you have more money going out, then cash flow definitely is super important. So you probably has to be on the conservative side. So have your loan fixed at medium term, like 2 years. It just gives you more certainty than having everything fixed for 1 year. You can still have a part of your loan on 1 year rate because it's cheaper, but you also hedge for the longer term rates in case rates do go up by 1.5% in 2 years' time. So it really hard to say what you should do. So you have to do your own prediction and you have to consider your own situation and see what is more important. Is it cheaper rates or certainty? Okay, and while the break cost is very little or nothing, it's the best time to do it. Now with the break cost, the best way to find out is to contact your bank. we cannot calculate that cost, unfortunately, because they're driven by bank costs, so it's not public data. So it's best to contact the bank. They will tell you straight away. And then you can contact us. We can help you to do that analysis and give you our best possible advice in your situation. So the call to action is to watch this video and then think about if it's a good idea to break your loan and refix, and how you're going to refix, what's your prediction, what's your cash flow going to look like for the next 2 years. And then you can get in touch with us. We're more than happy to help. So that's all from me this week. I hope it gives you some insights. So hopefully we can, if you need help, we can help you in whatever the way. So thank you so much, and please feel free to share this video with your family, friends, because you probably can save them heaps of money. Okay, until next time, see ya. Bye-bye.